Hey everyone, it's Victoria Mysin here at Guide Real Estate in Sacramento, California. We're here today to continue our talk about some of the latest questions that I'm getting from my clients regarding real estate and real estate financing. To help answer those questions, I'd like to introduce Yuri Baturenko, the founder of the Vanguard Mortgage Group.
Hi, Victoria.
Hi, welcome. How are
Thank you.
you?
Oh, great, as usual. Happy to
Yes.
see
That's awesome. Good. Well, let's get started. This is kind of just getting back to the basics, which is super important. But what is PITI in mortgages, and how do you calculate it in advance for our
you.
buyers, for sellers that are looking to buy and sell? So,
It's always good to understand basics because then it makes transaction easy and understandable. And yes, using abbreviations is always confusing for people that are not in the industry. So
yes.
PITI is really easy to understand. It's principal, interest, tax, insurance. So it
Okay.
basically is your whole payment for the housing. So
Mhm.
whatever is going to be your housing expense, it's all in PITI. Um, the way why is it important? It's because PITI is something that is affecting debt to income ratio. So basically, it's the whole
Mhm.
housing payment that the lender takes to calculate to incorporate it into computing debt to income ratio, which is essential for underwriting the mortgage. It has to fall before below 50%. Then the lender is going to approve the mortgage. If the income is not sufficient, then it's going to be
Mhm.
declined mortgage. So
Mhm.
there is one important thing that I would like to add to PITI is
Mhm.
letter A. Sometimes you would see PITIA.
Uh-huh.
That there is also association there, and
Oh,
when
that's right.
right when computing housing expense, and there is a condo association or just HOA without condominium, and there is a fee for that. That
Mhm.
also is included in housing payment, and it also participates in debt to income ratio. So
Yeah.
that is what it is:
Okay.
principal, interest, tax, insurance. These are all things that you would have to pay
Mhm.
when you purchase real estate, and that will be your monthly expenses. So you have to be prepared for that.
Okay.
And now I have a question for you.
Cool.
Also regarding basics, and it is super important because now in current market we see a lot of younger people purchasing real estate, and a lot of first time home buyers. And here comes
Lots.
the question. Yes, because rates are going up, and then that puts away the investors a little bit because they kind of waiting to see what's going to be happening. But those people who actually look for a place to live and then make it home and then buy it, and then uh, so that's still anytime is good for them, right?
Everybody needs a house,
Right,
even
right.
actually,
When then
yeah.
rates go down, they will refinance. So yes, it's rates is not issue. The issue is affordability. So those people who can afford higher rate and they still have great income to support that,
Mhm.
it's good time to buy.
Yeah.
So, but for those people, there is a question regarding down payment. Is it like what is the optimal down payment? And then I can explain that from a lender point of view and a financing point of view. But I would
Mhm.
want your opinion regarding of down payment from as a real estate professional.
Yes, yes. So first-time home buyers are always exciting to work with, just because they're hitting the market, haven't had experience in buying a home at all. So it's a lot to educate, a lot to know, and there's a lot of miscommunications or misconceptions about what it takes to buy a house. So I always um, I always tell my clients just to connect with a lender as soon as possible, just to help them kind of understand the process. But some of the things I always tell them that is it's not a 20% down payment that's required right off the bat. There's so many different programs out there, especially for first time home buyers, and just to be aware of those can open so many options for you. So 20% is of course the optimal amount to give, but there's FHA programs, there's USDA, VA, as well as conventional. So all those are different programs. That FHA is about 3.5% down if you are a first-time home buyer, right? Yeah, and then there's even programs that I like the CalHAFA, and I'm sure you know about this one. Of just off, they came out with a new program called Forgivable Equity Build Loan Forgivable Equity Builder Loan. So it gives you a 10% of the purchase price of your home, and it's forgivable to the borrower after 5 years. So I mean, something like that for a first-time home buyer is huge. Especially if they meet the income requirements and all those. So
I would like to enhance that a little bit. These are typically county or city or municipal programs that are stimulating housing market, and there is a budget that is set for the year, and it's based on first come first serve. So if you are first in or second in line, you have more chances, and typically up to 50,000 that local governments help people, and you are right, they are typically forgivable. That has nothing to do with lending. That is community helping people to purchase their first homes, and these programs go in line with lending program, and they require about the same documentation. But this is something that to inquire about in a local either municipal or county on a county level to find something.
Yeah. And it's huge to know about, and a lender mortgage professional can tell you about those kind of things. And on top of that, other items as well, 3 to 5%. Just different strategies that you can use. That really, if you don't know, you don't know. So it's
right. It's always good to ask, because again, if you are starting to finding out something, it's a lot of information to read about and to learn, and then you can always ask somebody who will help you to guide at least in that information. And then again, it's such a simple thing as VA loan, which can be at 100%, but then it's not everybody knows that even a little bit of service could qualify a person for a VA loan. So it's all again,
all the nuances. Yeah.
Right.
Yeah.
Find out from the person that you intend to work with. They will be able to help client with that always, and that's basically the task of
knowledge is power.
Right.
Yeah.
Right. Let's talk about market.
Yes. So let's talk about the market. So can you tell us a little bit kind of what the current mortgage looks like, mortgage rates and different markets? Yeah.
There was Fed meeting today. They
okay.
right. They didn't do another hike, but they said that okay, yes, inflation is going down, but we would like to see it going down more, and then we will be pulling back on rate hikes. So they confirmed that they still will be probably increasing, but it's unknown when it's going to be next meeting or not. They still gonna eye inflation, and then depends on what it's going to be. They probably will do another rate hike, but probably skip one in the September meeting. And then that's on the rate side. Now, what is happening across the nation is basically builders' confidence has gone down. We discussed that already, but another thing is a big wholesaler went out of this. Seized their wholesale operations. They still doing retail, and that is Loan Depot. They stopped their wholesale operations. That signals about two things. First, it might signal that they have lack of applications from their brokers that they used to work with, or it could be that it became harder to sell mortgages. So that's why they seized, and it became less profitable, harder to compete. So that signals about shrink of the market also. Another good thing actually, and it's coming, lenders becoming a little bit creative. And for example, what was rolled out today is incentive that will help borrowers on the first and then the second year. And the way that it's structured, it's really interesting. So the bank offers a discount on the rate that will be, for example, the rate is 5.5%, right?
Right.
Say, okay, for the first year, the borrower will be paying 3.5%. And then for the second year, it's going to be 4.5%, and only on the third year, it's going to be 5.5%. So basically, it's 2 year relief. First year 2%, second year 1%. But there is an interesting way where they come with this discount. They actually advised me as a professional, as a broker, somebody who is doing this deal, to talk to realtors and to persuade seller to give that as a seller credit to help the buyer with this discount. So, and it's all getting inbuilt in the mortgage and in the contract. So that's how, because they know that sellers are experiencing now that they want to sell, right? And it's not that much of money that they have to discount, but that's how they do it. Not so they try to guide borrowers, to discount points to get basically to get lower rate. So they are more confident, and then if a borrower think that rate is high now, so maybe in 2 years it's going to go back down, then they can refinance. So they could, like, basically I would be able to do the same thing but I just wouldn't think about it, right? And then they come with this solution. Okay, let's try to implement this, and then let's try to incorporate that into the contract and give this option, like, start make people think this way about it, which is really good. If when something like this happens, it always stimulates market, and then it gives more confidence to the borrowers, because at least first 2 years they will be paying lower rate, and then if market if the rate falls down, then it's good. If it grows, 5.5 might be a good option also. So it's good in this sense.
For sure, yeah. It's definitely gives buyers a little bit more flexibility and kind of options, and sellers, if you want to sell your house quickly, you don't want days of market to be ticking up, then this is a great option just to help the buyers secure that lower rate and get them a house. Everybody wins.
Correct.
Yeah.
Now, I have question for Victoria. In today's market in California, what would be the statistics on prices, sales prices? Basically, is it below price, at the listed price, or higher than listed price?
Yeah. So
Info?
Yeah, of course. I'd love to update you guys on that. So everybody is, there's like, people are saying it's a buyer's market, it's a seller's market. Everybody's kind of all over the place, not really sure, or I hear a lot that it's a buyer's market and buyers are coming in. Well, I'm going to offer, 50,000 under, or, or whatever thing, whatever scenario, whatever news story they heard that day is kind of pushing their narrative. So I just wanted to update you guys. Average properties, on average, properties sold last month 2% below the original list price in the region, which means, thankfully, properties are not getting bid up as much. Last year at this time, it was about 3% over list price on average. So that's a huge difference. But it's not really to say that people are, that you can come in with a really aggressive offer. There's still about 47% of sales last month had more than one offer. So it's not really like a 2008 scenario where you can come in and offer $100,000 under. It's more so you just have to offer smart if you like the house. Just kind of going in, doing a CMA, comparable market analysis with your real estate agent, kind of looking at other properties that sold recently, and just making smart offers. I mean, it's the stats are important. So just have to look at it wisely, and of course, always have that real estate professional with you, just to kind of guide you through the process. So it's so it's offering smart. Yeah.
my understanding of it, in my opinion, buyer's market is time to buy. That's why it's buyer's market. And
Mm-hmm.
the strange thing is that market is always like that. When it's seller's market and it's lack of inventory, everybody wants it, and then people put money on top of the, like, basically
Yes.
offer more, more, more. They bid and bid and they buy above market and all of that. Everybody wants to buy, and then all of a sudden it turns around and not really
Mm-hmm.
much changed. Okay, rate is 1 point higher, but it's still
Mm-hmm.
affordable and still, but you can discount a lot. And all of a sudden, nobody wants to buy because everybody is afraid. I think it's a great time to buy. Buyer's market is a great time to buy. That's actually when you get deals, when you can negotiate, when you can actually offer less, when you can do inspection, find something forced. Because
Mm-hmm.
if there is a seller's market and inspection comes back and then you want them to fix something electrical or something like that, they're gonna say no because they have another
Mm-hmm.
10 offers and then they won't. Whereas now you can actually make sellers do things for you and actually buy below market. This is a great time. To me,
Absolutely.
buyer's market is a time to buy, not
Yeah,
seller.
absolutely. I agree. Awesome. Well, okay, everybody. Yuri, thank you so much for being on. And thank you, everybody who kind of joined us on today's show. Let us know if you guys have any questions, and we're always happy to talk and give any tips and tricks and kind of updates on the market if you need any.
Thank you very much, Victoria. Always pleasure to see you and to work with you. Um, Friends, you have any questions, give Victoria a call, give me a call. Pleasure being here with you. Have a great
Awesome.